Alright, so we're looking at exercise 11.6 and it's for Christchurch Motors. Now what the aim of it is to calculate the net cash flow provided by the operating activities using the direct method. But let's first read the question. Christchurch Motors Proprietary Limited has completed its first year of operations. Now that becomes important to me when I'm looking at completing these items down here. It's on the 30th of June 2015. Its statement of profit and loss showed that the business had revenues of $170,000 and operating expenses of $80,000 that included some bad debts of $1,000. The accounts receivable and the accounts payable at the year end were $43,000 and $33,000 respectively. Assume that the accounts payable relates to operating expenses, ignore the income tax, the allowance for doubtful debts is $1,000 and there has been no direct write-off to the accounts receivable. Okay, so there's no direct write-off to the accounts receivable. Okay, so that's after looking at all that information. We now need to calculate the net cash flow provided by my operating activities. Now these are all operating activities, there's nothing we need to exclude, so that's a good sign. Now the first thing obviously we see is we've got our accounts receivable here, and my opening balance, if I'm reconstructing the cash flow, I'm looking for an opening balance. Now it's in the first year of operations, so that must mean my opening balance is nil. Then I'm going to look for my closing balance. So step 2, my closing balance, and it tells me down here accounts receivable was $43,000. So my accounts receivable had a closing balance of $43,000. It then goes on to tell me, it actually tells me a little bit earlier, in the statement of profit and loss it showed the business had revenues of $170,000. Now I'm going to just assume that all of this is credit sales, and that's all gone through my accounts receivable account. And so that's where I get to. Now I'm going to balance the account off, which means I've got 170 on this side and 170 on this side. So that must mean that my cash collected, because it can only be cash collected, is, what's that, $127,000. Alright, and that's an interesting piece of information. I'm going to highlight that, even though I put it in red, I'm going to highlight it because that's going to go into my cash flow statement. Now let's have a look at my accounts payable. Now, once again, it's my first year of operations, so my opening balance, whoops, let's write that in blue pen. My opening balance is nil, same as first year of operations. My closing balance, accounts payable at year end was $33,000. So I've got $33,000. My operating expenses were $80,000 and included bad debts of $1,000. So that $80,000. Now bad debts is what we call non-cash. So I'm going to exclude that from my operating expenses. The reason why it's non-cash is I gave someone some goods and they gave me nothing. So that's why it's a bad debt. So there's no cash flow. So I've got $1,000 here. I'm going to take that out of that to give me $79,000. And that $79,000 is going to go into there as part of my payments. My operating expenses, or my cash operating expense. So if I balance that off, 79 on this side, 79 on this side, that would then indicate to me that my cash paid, because it can only be cash paid, is the difference between here and here, which is $46,000. And I'm going to highlight that because that is an important piece of information for my cash flow statement. Now I'm going to do my cash flow statement. So, cash collected. Cash collected. Now that cash collected comes from up here. So, oops, that pen doesn't work. Let's do it in red. So my cash collected is here. I'll make that look a bit, there you go. And that's 127. My cash paid is this amount here, which is 46,000. Now I'm going to indicate it's paid by bracketing it. You don't have to, but you just got to remember it's one minus the other, which will give me a operating cash flow of $81,000. And that is my net cash flow from operating activities.